Hey, what's up, everybody? My name's Cameron Barsanti. We do this every week here on our off-market self-storage page. So yeah, catch us every week. Been a little bit of a hiatus, just a couple of weeks. Going to check out a property in Alaska here on Monday. So, a little work, a little fun. Thanks for jumping in. Again, my name's Cameron Barsanti. I'm CEO and founder of Storage Life. Storage Life, we're a community across the country. We're finding, funding, and operating self-storage together. We teach you how to do it, or we help you scale. If you're already an existing operator, if you want to check us out, go to storagelife.com. Okay, diving in today, how does self-storage compare to other asset classes in today's market? We're always wondering, well, why are we still buying storage? Why are a lot of my students and my friends and partners still buying storage? How is it ranking up to other asset classes? I got some cool charts I'm going to show you too. Stay around for that. If you have any questions, drop them in the comments. We'll definitely get back to you. Okay. First of all, it's a tough market for everyone. I just got back from two different real estate conferences. One was mainly single family, Airbnb, multifamily, stuff like that. And it was wild because people are getting hammered. And I kind of knew that, but the multifamily space has gotten their tails kicked for years now. I know some really good conservative operators that are getting crushed. Some are just hanging in there. Some are having more capital calls, meaning they have to come in with more money from their investors. Some are giving their deals back to the banks. This isn't a blanket statement. It's not meaning every multifamily deal is a bad deal. I own a couple of fourplexes still, and they're doing great. It just means that nationwide, it's been tough. It's been really tough. Single family home investors, flippers, I know are having a really hard time. Most of them. Some of them have a niche market, or they just have something that they're doing nobody else is doing. Airbnb is hit or miss as well. I can't say the same for storage. Is storage a tougher market right now? Yeah, it's been a little bit more challenging to find to a certain extent, but at the same time, we're still finding deals to buy. As you guys know, or maybe you don't, that self-storage thrives a lot of times when other assets are not, or when there's some sort of global economy issue or a global crisis, or there's a lot of unsettling things happening, or a lot of uncertainty in climate, in the market, in the people. A lot of people are scared right now. They still don't know what's going on, what's happening. And yet we find in a lot of pockets across the country, storage is still in demand. I don't think it's going anywhere. So for me, we're still buying. We're still excited. We're still looking at, especially in the next 5 and 10 years, we want to buy as many existing mom and pop facilities as possible. We also want to convert if it's the opportunity's right. We're doing a ground up right now in Virginia. Me and one of my students, they're building homes all around us. And there's a moratorium on storage. You can't build anymore, and all the facilities are full. Of course, we're going to build there. So yes, all in on storage. We're still pressing. We still feel like there's a ton of opportunity. Let me show you a few little charts here. All right. So why self-storage? So this is kind of cool. It's a sharp ratio. What it's basically telling you is it's saying it's comparing self-storage, multifamily, office, retail, and industrial. And it's saying the average IRR, which you can see is actually higher in industrial, but it then compares it to the risk. And so on this chart, it's kind of cool. You'll see that actually self-storage is a point higher than industrial and much higher than retail and office, and over a point higher than multifamily. Again, comparing the average IRR and then combining the risk. And self-storage is the leader in this. Cool. I'm not trying to convince anybody of anything. I'm just sharing some stats, right? Industrial's hot right now. I know a lot of people doing really well in it. I'm a little bit more concerned with it because I do feel like it's bubbly, and I feel like at some point there's going to be not the demand of flex space as there is now. I'm not saying don't get into it. Again, I know people that are doing well in it. What's next? Okay, so sensitivity to the GDP. That's what we're talking about earlier. When something is happening, when there's a global crisis, here's the effect in the asset classes. You'll see on the left here, lodging, mall, office, industrial, life science, strip center, apartment are all pretty volatile when it comes to a GDP change. On the right side of things, on the red, you'll see self-storage, and it's pretty wild, but it's actually next to cell tower, gaming, net lease, manufactured housing, and student housing, meaning that actually, when there's a lot of current market or global sensitivity, self-storage is one of the least affected by it. Again, we kind of know this, but again, just another reason why we are buying storage. Number of households. This only goes to 2024, even though I know it keeps going up in 2024, but it is where this graph ends. But the number of households using self-storage continues to go up, which means we continue to want to buy or build more storage. Doesn't mean you can't. You got to be really careful not oversaturating the market. Doesn't mean every market needs more storage. It means there's plenty of pockets in the country that still do not have enough self-storage. We love those markets. Capital expenditure. So, how much money does it take to get into storage or to build storage or to convert or to fix storage compared to other asset classes compared to its NOI? You got your hotel, office, strip center, mall, apartment, industrial, healthcare, and they're 8%, the far lowest self-storage, meaning the least amount of money in comparison to the NOI, to your return. So anyway, going back, these are all stats. You guys can also find this stuff online, charts, information, data comparing self-storage to other asset classes. What are people finding? You can look at REIT charts that show the historical performance of self-storage over anything else. We can also, mention right now, I think it's still either it's in process or I don't know, maybe it's closed, but there's a big $10.6 roughly billion deal going on where Public Storage is buying out NSA, a big self-storage REIT. There's billions of dollars still pooling into self-storage. So for us, it's not about, is this a good idea? It's about how do we continue to get even more into the game, anchor ourselves into more markets, good, strong markets, maybe start building portfolios to look at maybe a larger exit, right? Maybe you want to start collecting, some B minus, bigger properties that maybe they're not cash flowing as much. That you could potentially exit in 5 years to a big buyer, potentially a REIT or somebody that's willing to pay a 5 cap, something like that, right? There's all these different strategies, but the bottom line is, yes, I want storage. I want as much as I possibly can find because in 10 to 15 years, the landscape's going to have changed. Is it going to be worse or better? We don't know. Who knows? Maybe in 10 years, now it's about finding all those 100,000 population markets in the country where you go and you can, based off just a square foot per capita, see that they have a very limited supply of storage and everybody's full. And you go, okay, cool. Let's start building or converting in these markets. Let's focus on buying the mom and pops in those areas that may be small but have room for expansion. Whatever else, I don't want to be in 10 to 15 years the person that's saying, is it too late to get into storage? No, it's not. I'm a big believer of the time is now. I couldn't be more proud and more excited to be in self-storage now because when I go to these other real estate conferences and I see how hard people have gotten hit, it's scary. My partner, he invests in ground up in hotels, in apartments, in single family. And we were talking a couple of weeks ago and I was like, how are your deals doing other than self-storage, outside what we do? Because the largest portion of my portfolio is with my partner. And he said, they are all doing bad. He's had capital calls. They're let deals go back to the bank. It's across the board. I even know self-storage deals that have gone bad. People got really careless. They weren't doing enough research. They were going to markets that already had a supply issue. 5 years ago, they were on this bridge debt, and they were like, oh, storage is a cash cow. Let's build in a market that's oversaturated. And now those deals are going back to the bank. That means there's opportunity for us. Got to capitalize on that opportunity. Take advantage. Again, I believe the time is now. So cool. Thanks for jumping on. We'll see you probably not next week, but the week after. Again, reach out if you have any questions. Love seeing you guys here. Really appreciate your support and good luck out there. Peace.